Boom. Hey everybody, thanks so much for tuning in to Young Money Investments. My name is Bennion, and I am sorry that it has been a while since I have filmed a video. Last week I was a little bit sick. This week I have been busy. Really having a good week. I've actually had a good 2 weeks of trading lately. And this video quality may or may not be great. I'm working on updating and changing things. I don't know if you can see the new Rode microphone that I have here. I also, maybe we'll tilt that up a little bit more as well. Hopefully this isn't just like completely ruining the video. Video quality, I have a new DSLR and I'm trying to figure out how to get the, I, I'm trying to figure out how to get everything kind of synced up. It's not working out great, but I figured it's better that I put out a video. The big reason you're watching this is for the call outs, for the ticker symbols, and not so much for the great video quality, audio quality, and those kind of things. So let's get into it. We're going to jump in. This is probably actually the first video that I filmed in like a couple months that I've actually put in my Young Money intro as well. So for those of you that are new, thank you so much for subscribing, and let's roll into it. I wish you could see like my setup here. Actually, it's pretty freaking dope. Like, maybe I should do a video on like the actual setup I have here. But anyway, let's roll into the trading. So I'm gonna pull this down here really quick. Kind of set this in the bottom corner over here, and hopefully that is good enough. Let's throw on Thinkorswim. So today's callouts are going to be kind of a mixture of a few different companies. I have about 4 different callouts that I'm going to be really focused on this week in terms of trading. For those of you that are just getting started trading, I recommend that you find usually maybe 1 or 2 positions that you want to take during the week. I don't recommend going into a whole lot of trades. Even these 4 that I'm going to go over with you aren't necessarily ones that I'm going to for sure get into. With that being said, well, okay, I'm in 3 of the 4, so I will say that. But I'm planning on taking a larger position in some of these. One of them I took on Friday right after they had a pullback. The second one I bought more into on the pullback. A third one I have a long-term position in that, meaning that I'm probably going to be holding this company for at least the next 2, 3, maybe even 4 years. So I have a long-term approach, but I can see the support resistance and the trades in those. Fourth one is going to be a ETF that I am going to be looking at trading. It looks like it has come down off of its highs. It looks like it's consolidating and about to hit support. And we're going to get into that as well. So why don't we actually start with that one? That's going to be the one I think that I want to actually start off with. I was going to start out with OLED. And maybe to be fair, you know what? Let's actually jump into OLED here. So OLED, as y'all know, I have been in quite a bit. I've taken very large positions in this before, as it has had this massive slide. I've waited through this whole consolidation period. This is basically the time I've been in it, is from here basically through here. Overall, I've been able to play the dips quite a bit and make out to be where I'm about break even on Universal Display. If you'll take a look here though, recently we had a little bit of break, a little bit of a sell-off, like I said, here on Monday. It took a sell-off of roughly about, let me take a look here. This will help me out here. OLED took a little slide of roughly about 4.72%. Now I got into OLED right at about, let's see here. I got in right at about 92.44. So if you take a look here, I got in at about 92.44. So I actually got in super freaking low, almost right towards the bottom there. I guess I could have gotten a little bit more in there, about 1.7% more. But what I've seen with OLED is a consistent pattern of support and resistance anywhere from this area right here. As you look, it had quite a bit of consolidation right down here, right at about $86. If it does continue to slide off, I'll look for a sell on this position. Although I am up right now about 1.8%. What I see with OLED is being able to write it back up right to about $100. So I'm looking at a potential of profit of roughly, if we can get my drawing tools going right here. There we go, support and resistance. Writing from 92.44-ish up here to about $100 right here at about support. So I'm looking for about an 8.5% return on Universal Display. As you can see, running right through this area right here, we tend to see quite a bit of resistance. So what I see in Universal Display is a simple pattern that I've seen consistently over and over and over again. With that being said, if you don't feel comfortable with this pattern, as it is a descending pattern here, I would not get into your Universal Displays. If you do see the resistance, or pardon me, the support down in this area, and you're looking for a nice little day trade, that might be what this is good for. If I do see a sellout here Monday, I'm going to just cut my position, take probably right around a 1% gain on that. It's only a couple $100. Probably actually only like $150 on that right now is what my overall profit is. And then I'm going to keep going. Then I'm just going to end up looking at something else. But I do see a nice little pattern here, like I said, being able to write it from somewhere in this range up here to about 100, not 108, pardon me, right here to about $100. That gives me about a potential for profit of about 7.7, 8.5% is kind of what I'm actually going to be looking for in terms of a swing on Universal Display. And you got to ask yourself, is a 7 to 8% return on this investment worth it for probably a 1 week period of time? I say so. I think it's worth it, and that's why that's going to be my first position that we're going to be talking about this week is OLED. Other reason I'm looking at OLED as well is if you do look right here on the RSI indicator, you're looking at, if you bought in right now at an RSI of about 34, even if you're wanting to ride up somewhere in here, right where the RSI has been pretty consistent, it would be right here at about a 50. As you can see, if you're riding in the 50 mark right here, you would still be looking at, and you wanted to get out and be very conservative, I mean, you could still look at this as a day trade, and right through here, you're looking at pretty consistently, I guess right through here would be about $98. I mean, you're still looking at a nice 5% potential for profit. So for me, if I can be making anywhere between 5 to 8% on a day trade or on a weekly trade, I think that's a great opportunity. So I really do like Universal Displays in terms of a good swing trade, or even potentially a day trade if you're wanting to use RSI and day trade this on a day trade position. If we were to do that, I'll look really quickly here at the charts here. I saw this massive slide. I saw it starting to bounce and come back out of it. That's about the time I bought, was after it hit this lower VWAP, and I saw that it started to trend above the SMA line, or EMA line, pardon me. If you wanted to on a day trade, you'd probably want to sell out around middle VWAP if you were day trading this on Friday. Like I said, I'm looking at more of a swing trade. I have about a $9,000 some odd dollar position, I believe, in Universal Display. Second one that we're going to take a look at today is going to be CPE. CPE, and this is going to be, honestly, I can't even tell you. It's a petroleum company, if I remember correctly. Don't even really know the company or what they. I mean, I know they do petroleum, but that's about all that I know in terms of their stock here. They recently took a nice little $3. They took a 3.23% sell-off this Friday. If you take a look at the long-term chart pattern on this, this is why I really enjoy and really am liking the look of CPE here. So if I go to the 180-day chart, we're going to pull it up here. You can see a consistent pattern, right? I like that this has been a very horizontal pattern, but I also love that you can see a consistent uptrend in this. You're finding support down here, but every time it finds support, it tends to come up higher and higher. Now, obviously, if you were to buy in right here and you ride it up to this resistance, you're looking at about 36%. I really like CPE because of the percent, gosh, pardon me. I like the percent and the potential for return on this particular company. As you look on the 180-day chart here, you can see a lot of this consolidation right down here at about the $10 mark. As you can see before, it has also hit lows of 975. Down here, it hit more lows again, 982. Over here, it hit lows of right at about $10, 990 or so. If you are buying in on CPE, do understand and know your area or your risk tolerance, where you need to cut losses. Right now, we're sitting about 988 per share. When the market opens, you'll probably be trading right there at about 988, 990. What I would look for in terms of potential cutting my losses on CPE here, I would be looking to sell somewhere right around the 970 mark, 968 maybe, if I'm being really non-conservative on that in terms of cutting my loss. At that point, I really would say that it's broken pattern. I need to get out. I don't really want to ride it much anymore. I'd rather get out, see if it goes down a little bit more, and then bought in. If you're looking to actually play the pattern and not play the dip and then the bounce, I would say wait until it breaks above this at this EMA line right here. So getting in at about 1020 if you want to be more conservative. Riding it from about 1020 up here to resistance of, gosh, that's going to be about 1060. You're still looking at about a 3.49% potential for profit. That is a good weekly swing trade. But like I said, I really do like the look on this long term. Maybe did I get in a little bit early? Sure, I could have with my $8,000 position. That's just my feeling on it. I could have gotten in a little bit early, but I'm willing to get in early on a trade like this because I see the long-term potential for profit in terms of a long-term swing trade on this. Even if I were to get it in, like I said, in trade from where I'm at currently, and I didn't even play it up to the very top, gosh, this is taking way too long. If I was to write it up just to the SMA line, I mean, I'm looking at a 20% potential for profit on that. So I really like CPE. Another reason I'm liking it right now is, again, look at your RSI indicator. It's had sell-offs down here to about a 2022 RSI. You also look at right here where it's trading at. You're looking at about an RSI of about 32. RSI is showing a way oversold position right now, and that's why I'm really liking getting into CPE. Next company that we're going to talk about is my long position, and that is going to be Cirrus Logic, guys. Cirrus Logic is one of those that I am pretty bullish on long term because they specialize in making wafer chips that are built. 80% of their business, or maybe it's 70% of their business, is based on iPhones. They put a lot of chips inside of iPhones. Hey Siri and those kinds of things are actually done. Siri's going to talk to me now. Are actually using Cirrus Logic chips. I see voice being a huge part of iPhone as time goes on. That's why I really do like Cirrus Logic in the long run, and also being able to see, I mean, if you were to buy in where it's at and riding it up to where it's been previously, that's about a 35% return on there. That is a good return. I do think it's going to take time in terms of getting those kinds of long-term returns on Cirrus Logic. I have probably about a $27,000 position in them right now. I would like to make that position bigger as time goes on. If I can buy anywhere from here to $40, that's great. But I also like swing trading Cirrus Logic as well. You can see on here, if you zoom in, you can see a good amount of support right in here at about $37. And that is why, again, if I were to draw another support line, looking at my chart here, I would see nice support. I mean, if I'm being really conservative here, nice support right down here where it's currently trading at. So looking at Cirrus Logic, after its little sell-off it had on Friday, sell-off of about 4%, 4.11%. I like that for a nice little swing trade because I believe that it was oversold. As you can see right here, RSI was showing way overextended. Could it potentially drop a little bit more? Sure. If we look at the chart pattern right here and see this nice little dip way below, look at RSI. RSI came down here all the way down to a 22. 22 RSI is crazy. And obviously, again, we saw the return and the bounce up. So RSI has taken a massive hit down here to about a 43. Yes, it would be more ideal to buy into the RSI being down here at about 34-ish. But I do see probably buying a little bit more of this, especially if I see that uptrend and that reversal off of the EMA and SMA line right here. What's crazy right now is we're kind of hitting a climax in Cirrus Logic where the EMA and SMA are both kind of intersecting. As the SMA has been trending down, EMA is starting to trend up. We saw a little bit of cross pattern there on Friday. So I do like Cirrus Logic. I do like Cirrus Logic at this price point. I also like the fact that let's do this really quick. I don't know why this, okay, there we go. I do also like the fact, guys, that I'm buying right here at support. I wonder if I can scroll over here. I'm like having all sorts of issues today. I apologize. I also like the fact that, wow, this is horrible. Let's do it right here. I also like the fact that if I'm buying off of support right here, I see the potential for return being up here to about $40, like I said. If I'm buying in or selling right in here, again, that's about 9.59% potential for profit on that. Good money. I like plays, and as you know, if you've watched any of my videos, I like positions and plays that give me the ability to have a maximum return on a weekly or monthly basis. I try to mess with things that are giving me about a 10% return. Because if I need to cut short and I only make 4%, I know my potential is a lot larger. Whereas if my potential for profit is only about 4%, if I have to cut half of that, I'm only going to make 2% on my investment. And so I like to go for plays where my potential is much greater. Last one that we're going to do today is going to be JNUG. JNUG is a gold-based ETF. If you did not know yet, JNUG is going to be the ETF that I am going to be purchasing this week. JNUG. JNUG. This is a brand new fresh chart pattern. So this is a gold-based ETF, as I was talking about. If we're going to do a chart pattern on this, where would be some places that you would draw support and where would you draw resistance? If it were me, and that's obviously what I'm going to do, I'm going to do what I do, is I would look right here. I'd say, okay, great. First place I see a large trend is right down here, right, guys? You can see it touching support multiple times right here. I'm going to balance it out, make sure it's 0, get it right there. Second line, I'm going to go right up here, and I'm going to go, wow, look at this more recent trend that's been going on right here with JNUG. Okay, it looks like it's had a lot of support right through here, but even in the past, look at all these where it's peaked up and spiked and then dropped down. Peaked up and spiked and dropped back down, and then it consolidates. Oh, we got a little big break, and then it comes back down to support. I would say, honestly and truly, if I'm using that full line right through here, guys, I'm looking at right in here to here. Making sure that it's zeroed out. I'm going to go JNUG, and this gold-based ETF has consistently consolidated right here at about $13.96. I'd say about $14 roughly if we want to be kind of correct in that. If you also see, you see a little bit where it does consolidate down here at about $13.63, right? Currently, it is trading at $13.80. Now, based on those, and also based on the RSI indicator being right here at about a 39, again, it would be nicer to be buying down here where it's trading at about a 30 to a 29, but I will still take an RSI when it's at 39. If it's in the 30s, guys, and the chart pattern is matching up, I see a lot of value in that. So what I'm going to do here, I am going to purchase and take a small position in JNUG. Because of this trend pattern right here where it started to bounce last time previously, I am going to set basically a sell or a stop loss right at about $13.50 or so. I'm going to buy in on Monday at whatever the market open is. If it kind of goes a little crazy in the morning, I'm going to be day trading that and kind of looking at it. But like I said, for a nice little week, basically a nice trade, I'm seeing it right here at about 1380. On a day trade, you could even make about 1.27. But what I'm going to be looking for is buying in at this price point right here and looking to trade it up to about the 1458, 1455 mark. Looking for about a potential of profit of about 4.14%. If you'll notice, that is where resistance has been consistently for the past several months. As you look at that chart pattern, resistance, resistance, resistance. So that is what I'm going to look for in a week trade. If I don't make that 4% in a week's time, or if I end up losing down there towards that area, if I end up having a drop off, I'm going to sell out. I don't want to leave my money in JNUG because I don't know if I really see a long-term value in this. So if I don't see an increase or I don't see me hitting that 4% this week, I'm going to just look to sell out of it and put my money in something else that will make me a little bit more money. So I think that is honestly and truly the three main plays. The reason I'm also getting into JNUG, like I said, first reason is the chart pattern. Chart pattern, chart pattern, chart pattern. That is the biggest reason why, is it is so horizontal, so predictable, so normal to see this pattern that it's easy money. It's easy money for me in terms of looking at the chart pattern. Second reason I'm looking at JNUG is because of the RSI indicator being down here, being in the 30s. RSI is so important at the 30 range. I love that. Another reason, and this is going to be the one thing that most of you probably never actually have done, and I actually never said this in any of my videos, so this is going to be a first for any of you that are watching my videos, and that is going to be the gold futures. So forward slash GC is what you will search for if you're looking for gold-based futures. So gold is a commodity that is traded through like all around the world. It's traded 24/7 essentially. I know it's not actually 24/7, so those of you that want to correct me in the comments, don't worry about it, I know. But it is traded not like a stock where you have normal market hours and those kinds of things. Gold is traded all the time. If you're looking at this gold-based futures right here in the commodities, you're going to see a very consistent pattern, sell-off. Then you starting to come back up, got close to what used to be support and what is now resistance, and had a sell-off. Kept trending along with the SMA line right here, tried to break above the old support, which is now new resistance. It could not, and had this massive sell-off. Where did it sell off to though? Well, if you come over here and you look at this, you're going to see it sold off to another old support line essentially. So I like the spot in terms of GC where it's at to see a nice little rebound. Now, I'm not going to get into futures. You do see a nice 2.68% return, probably closer to 2.7% return on that. But again, I'm liking that the RSI on gold is showing that it's way oversold, way oversold on that. So those are kind of the three things that I really see in terms of why JNUG is going to be a good buy today. The other thing, JDST, I think is the is another gold-based ETF. And again, you can see the same exact stinking pattern right here. So if we zoom in on this, you look at where it's actually JDST is actually the inverse, I believe, pardon me. JDST is the inverse of JNUG. And so if you do see where it's at, you can see that it's a little bit overextended. It's coming up. If you look at this past pattern over the past few weeks, this looks to be resistance. And so it appears as if it's coming up on resistance right now. So with that being said, it should have a little bit of a sell-off. That should push JNUG up, and that is where I plan to make some money. So I believe that is everything, guys. I think I've went over everything that we need to cover today. I don't think there's anything that I've really left out that I can think of. Got my little iPad and the Rode mic right there. That's going to be everything in terms of positions and plays that I'm going to take care of this week. JNUG, that's going to be a big one that I will most likely be getting into tomorrow. Cirrus Logic, like I said, long term in that. Don't know if I'll necessarily play that. My main focus tomorrow is going to be on JNUG. OLED I'm in. I might put in a little bit more. CPE as well. I'm kind of curious to see how that plays out. But really, like I said, these are going to be the big ones. JNUG, Cirrus Logic, Universal Displays or ticker symbol OLED, and CPE is the other one. So ticker symbols. Ticker symbol JNUG, JNUG, JNUG. Gosh, I'm off tonight. Cirrus Logic, ticker symbol CRUS. Universal Displays, ticker symbol OLED. And then we're also going to have, it's like Carson Petroleum or something like that. I don't know what it is exactly, but ticker symbol CPE. So if you're wanting to look at those, jump into those, and I hope to catch you all in the next video, and I hope to get this all figured out so it's not so delayed, and so I can put out better content videos. There's a lot of topics that I want to cover and not just showing you videos. So yeah, have a great day, and hopefully this helps. Talk to y'all later. Bye.